Good afternoon and welcome to our first quarterly van insurance price index. My name is Stephen Kennedy and I will be looking at how prices have moved in the van insurance market over the past 3 months and then going back a little further and then thinking about what we might expect to come in the near future, looking at some of the factors that might be influencing that. As I go through, please feel free to log any questions that you might have in the chat, and I will do my best to answer as many of those as I can when we get to the end. I expect it will probably be about 20 minutes to get through the slides that we have, so there should be some time available for that. Firstly, a little bit about Pearson Ham. We are pricing consultants. We work across multiple industries, insurance being one of those. And our mission is to help our clients succeed through better pricing. So this is the core of everything that we do. And one of the things that we do in insurance to help our clients is provide market pricing insights. So tracking competitor and market price movements and being able to identify the impact on performance of those and use the information to inform better decision-making processes. We do this using panels of consumers. So these are real people that we've recruited and they've given us permission to use their details for this purpose and to collect insurance quotations. We also have agreements with the big 4 price comparison websites and they enable us to access and extract pricing information for the consumer panels. We try and replicate real consumer behavior as much as possible, so we have a panel rotation in place, so it's not just the same people running quotes every day, but we always do have a like-for-like comparison between days and between months, which gives us a really good view on how prices are changing within the market. So it's not how average prices are moving, which could be influenced by mix. It's based on a panel of the same individuals that will give us a really clear view as to where prices are changing, where insurers are making price changes. We have a lot of data cleansing processes, so there are always anomalies that crop up with this type of methodology. So we take out any anomalies that we are able to identify to make sure that what we present is as accurate as possible. And we have the key metrics that we focus on and daily reporting in place for our clients so that they're able to see what happened in the market yesterday, how do competitors move, and how might that be impacting on performance. As we go through the slides today, we'll be looking at some individual insurer price movements. These are anonymized in the webinar, but clients have access to the data which will show exactly who's making those changes and how that might be impactful. We operate in a number of different insurance areas with our market pricing insights, so car insurance, home insurance, van that we'll be going through today, pet insurance, travel insurance, and landlord insurance. So if you'd like to know more about any of those, please do feel free to get in touch with me and I'll be able to provide some more information on those for you. Okay, so moving on to van insurance. So what have we seen in recent months? How have prices been moving? And this is a view there. So between June, July and August, we've seen prices drop by 3.3%. So we can see there have been price reductions each month over that period, and this is a continuous trend. So we've seen prices coming down within the van insurance market continuously since June 2024. So this the trend, it kind of follows the private car market. I think the reductions are probably not as steep as we've seen in private car, but the trend is similar. Looking back slightly further, so this is going back over the past 6 months, we can see that there were similar reductions in the 3 months prior. So overall, in the past 6 months, prices have dropped by 7.7%. So we can see the biggest drops here in March and May, followed by smaller ones more recently. This means that prices have dropped by around 20%, so it's just over 20% over the course of the past year. So as you can see, we've got that continuous price reduction every month during that period, some months more than others, but the trend has been fairly consistent. You see the biggest reductions were happening here between October and March of this year. Things have slightly calmed down a bit, but we are seeing those price reductions continuing up to the most recent month. So as I say, prices down 20% year on year. If we go back slightly further, then we can see what was happening prior to that period. So, as I said, from June 2024 is when we've seen the continuous price reductions. Prior to that, the prices were slightly more stable. There were some ups and downs, but the movements weren't massive. So what we can see based on that, over the past 17 months, a year and a half, prices have dropped 22.6%. So we think 20% of that is in the past year. So the period before that was relatively stable. So about 2.6% movement, and then 20% more recently. So we can see that prices have been coming down, and they've continued to come down, and that's the trend. And this is based on the average of the top 5 prices quoted on the price comparison website. So these are competitive prices, and it's based on the like-for-like sample. So this is the same basket of consumers, and those are the movements that we've seen for the same people. So it's not influenced by mix. These are changes that have been deployed by insurers. So if we look at some of the main van providers, so we've got 10 providers here, and this is more or less based on competitiveness, the top 10 insurers within the market. And this is at a group level, so where insurers may have 3 or 4 different products. This is aggregated up to group level. So as I say, this is anonymized, but clients do have access to the data, which shows who the individual providers are at a group and at an individual product level. So we do see this, the 3.3% drop that we've seen over the past 3 months does mask quite a lot of divergent pricing activity. So we can see the range here, and this is just within the top 10 providers, between a 14% reduction over that 3-month period and a 9% increase. So often is the case that we see average price movements, and actually there's a lot more going on below the surface when you start to drill down and look at individual insurers. So we've seen some fairly significant movements in both directions over the past 3 months. This is a trended view over the past 12 months, so looking at those same providers. So providers 1 to 5, so this is based on where prices have dropped the most over the past 3 months, and it's an annual view of that. So we can see the year-on-year variances here between 18% down and 31% down year-on-year. Most of those are following quite a similar trend, where the price reductions have been starting before the start of the year. So as I say, the kind of average prices have been moving down since June last year. So that's obviously below that, we will see a number of providers who have been putting those changes in. We've seen some where it stabilized a bit at the beginning of this year, but we've then seen drops coming in again for several of those. So we can see that there are some slight variances in pricing strategy, but overall prices are dropping, and we can see kind of quite large drops between 18 and 31% for those ones where we've seen the biggest cuts in the past 3 months. This is looking at providers 6 to 10. So these are where price cuts over the past 3 months have been less extreme, or where we've seen those increases. So where we've seen they go up to 9% price increases. So what does the year-on-year movement look like for those? So yeah, we can see here, so they're still down year on year, so they're not quite as much, so between 8% and 21% down on last year, and quite a bit more stable during the course of this year. On the whole, we can see that price reductions have gone in. At the beginning, we've seen some increases, which have been followed by reductions and increases. So there are different strategies playing out here by different providers. So it's really important if you kind of understand who your core competitors are, to kind of understand how they are pricing and how that might be impacting on you, rather than just an overall market average. Looking at a bit of a segmented view, so there are a few different segmentations that we can go through to see where prices may be moving to a greater extent than others. So this is based on annual mileage. So actually, there doesn't seem to be much difference in terms of price movements. So that trend is pretty similar regardless of how many miles the vans are being driven. So we've got a range, quite a narrow range between 19 and 21% based on mileage. Vehicle usage, we're seeing some slight differences. So the range here is between 17 and 21%. So we're seeing that smaller reductions are actually being applied for vehicles which are used for haulage. So this is a relatively small segment. Most of the vans are being used for business use rather than haulage, and actually that's where kind of larger reductions in. So if customers are using vans for that reason, then they're seeing less of a reduction than some of the others larger segments. Regionally, again, there isn't a massive difference, but we are seeing that London has seen the biggest premium reductions over the past year. So prices have dropped by around 21%. In London. So we do see some regional variances. And as I say, London over the past 12 months is where we've seen the biggest price cuts happening. Driver age is where we're seeing a bit more variance in price movements. So we can see the range actually is a bit bigger here, between 17 and 23% down year on year. And where we're seeing the biggest price cuts are with the younger drivers. So that kind of the lines there, the dark blue and lighter blue at the bottom, where we're seeing that 23% reductions are under 26s and 26 to 30s, and older drivers, so the 61 to 70 and over 70s, are at the top of this chart. So where we're seeing that 17%. So there's still significant price drops, but we are seeing that they are being targeted, and some of those younger drivers are seeing bigger price reductions than their older counterparts. Comparing some of the individual insurers with the market average, I think is kind of really interesting to do. So this is looking at provider one, where we've seen the biggest price reductions. This is 14% down on the 3-month period, comparing with the 3.3% of the market. So we can see at a market level, we're seeing bigger price reductions for younger drivers, and a bit of a kind of a curve here where the level of reduction reduces as drivers are older. Then we get into the oldest driver segments. There actually are bigger price reductions coming in, not as big as the younger drivers, but bigger than some of those middle-aged. Looking at provider one, it's a slightly different picture. So the youngest drivers are actually getting the lowest level of price reduction from this insurer, and they are passing on more of their price cuts to older drivers. So interesting to see the differences between insurer specific strategies and what's happening in the overall market. And again, this is a similar view based on provider 7, where reductions were relatively small, so less than 1% down over the past 3 months. However, we can see that larger reductions have been applied to younger drivers. So we're seeing 1.6 to 2.2% for the youngest segments. So that, again, you can see that is reflective of what we're seeing in the overall market average. So I think it's things like this where if you're looking at the overall market and market movement, you may be wondering, well, why it doesn't quite reflect the performance that you're experiencing. So that it really depends on your overall competitive footprint and the competitors who are operating within your market and what they're doing, and that might be slightly different or quite different from what's happening in the overall market as an average market level. And this illustrates that. So we can see this provider 1 versus the top 5 average 12-month trended movement. So we've seen at the beginning of the period, from September to November, price movements were in line with the overall market. I think from that point, this insurer obviously felt that things were okay. They didn't need to put any more rate reductions through. So things stabilized. However, the market continued to come down. So throughout December, January, February, the market continued its downward trend, which has obviously had an adverse impact on this insurer, who's gone to April and thought, hang on, we need to do something here. So they've then had to put in rate reductions below that of the market to get into a more competitive position. So interesting to look at how individual insurers' price movements compare with that of the overall market. Thinking about some of those different pricing strategies as well that insurers might have. So product tiering is one of those, and we have that in the private car market, and we also have that in the van market. So again, it's interesting to see over time how those tiered pricing strategies might be moving. So this is based on provider 2, and we can see that the variance between some of those tiers has changed over time, and so this is looking at August 2024 and August through to August 2025. So last year, the essentials or economy product was 10.8% lower on average. These are the median, based on the median prices, than the standard. And the premium product was 3.7% higher. What we've seen this year is the price movements have varied by product, which means the economy tier is now 12.9% lower than the standard, and the premium product is now 9% higher than the standard. So we're seeing a bigger variance between those different tiers, and that economy tier becoming relatively more competitive over time. So we would expect that they would then be achieving more top positions, getting more clicks, and then that enables whatever cross-sell and upsell strategy they might have. And that is where they may be able to upsell customers to the premium product, where again the price differential has increased and they're able to potentially make more margin. So that's one view of a insurer's tiered product strategy. This is another. So Provider 8 has a similar 3-tiered strategy. We can see that overall the proposition is quite different to begin with. So last year, the difference between the standard and the economy product was 45.6%. So quite a significant savings, so much more than the other provider. And the difference between the standard and the premium was 2.5%. This year, the gap is slightly narrowed between the economy and the standard product to 40.3%, but it is still quite a difference, whereas the difference between the standard and the premium has been maintained. So that, again, if it's your competitor and you are competing against different tiers, it's interesting to be able to track and to see how those strategies are changing and how that might be impacting on your performance and what the most effective response would be to that. Okay, so that's a view of the data that we have. And now thinking about what might be coming next within the market and what might be the key drivers of that. So thinking about what's happening in the van market overall and how might that be impacting on insurance. So the first icon here is a decline, and the decline here that I'm talking about is in new van registrations. So we've seen registrations falling steadily. There's been a 12.1% drop in the first half of this year, and that's 7 or 8 months of consecutive declines in new vehicle registrations. So this is particularly impacting on the largest and medium-sized vans. I'm thinking about that from an insurance perspective. So I think if this is a shrinking new van supply, it could raise premiums for used models. So the cost of kind of purchasing, the kind of value of those models would be increasing. And I think it's reducing choice and increasing reliance for consumers on some of those older vehicles. And again, that could lead to an increase in claims. And again, that might impact on premiums. Secondly, we are seeing big growth in the electric van market. So registrations are up 53% year on year. It still represents only around 9% of the total sales. So it's below the targets that were in place, but it's quite a significant year-on-year increase. So again, we're seeing the same thing in private car. As EV adoption continues, insurers are going to have to adapt and adjust actuarial models. So again, there's a balance between kind of lower running costs, fewer breakdowns, and on the other hand, higher repair costs and specialized parts. So again, we may be looking at an increase in premium based on the cost of repairing some of these newer electric vans. Theft remains a challenge in the van market. So we've seen an estimate of around £800 million annually in losses from vehicle theft and theft from vehicles. So again, this is going to have an impact, and insurers are going to have to cover the cost of some of this. So it may be that we can look at pricing differentials based on things like Thatcham approved GPS tracking, tool insurance, guaranteed hire covers. So some of those things that are going to mitigate the impact of the higher cost of theft claims. We're then looking at kind of economic pressure, so the macroeconomic environment is tough. We're looking at legislation and tax changes, so for example, the reclassification of double cab pickups. So these are things which could contribute to a dampening of demand and delaying modernisation. So again, it's similar to the kind of the decline in new vehicle registrations. So it's older, less safe vehicles remaining on the road. Again, this could be increasing risk and could lead to additional claims and, of course, higher premiums to be able to cover that. And then we've got the overall market and price calculation, digital transformation. The market's been softening, so we've seen from the slides we've been through today a 20% drop year on year. So prices have been coming down. We've looked at some of the kind of the influencing factors that are happening at the moment, which suggests they may have to start coming up again. So thinking about, well, how do we try to maintain competitive premiums in a market where there are cost pressures? And I think the van, as well as private car, the van market is looking at new digital ways of pricing, telematics, based pricing, AI-driven underwriting. And I think some of these digital tools could be designed to help reward kind of safer and more efficient operations and drivers. So that's kind of a view from the market, what's been happening, current environment and the context. So again, as I say, prices have been coming down. They've come down significantly over the past year. We've seen that continuing over the past 3 months. However, it does mask, the average does mask a lot of divergent activity. So there are prices already increasing, and I would expect, given the current environment, that other insurers might kind of stabilize and we may have reached or be getting close to some plateauing of prices, if not immediate increases. Okay, Q&A. So we have a couple of questions. So a large amount of rate softening is the Market 5 index being distorted, new product launches, pricing new business aggressively rather than reductions from existing providers. I think when we've looked at the providers individually, so looking at the top 10 providers, we are seeing year-on-year reductions across the board. More recently, we have seen those price increases. So I think there's probably more divergent activity now than there would have been previously. But yeah, I think overall, the average has been driven by most, if not all, of the main providers reducing rates over the past year. So you know the profitability context for the van market. Was it very profitable in 2023 and 2024? That meant the price reductions are technical and not just trading street price movements. I think there is some of that. I think what the van market will be subject to some very similar external cost factors as the private car market. And we have seen improvements in profitability within that market. So where we're seeing similar levels of rate reduction, I think there are probably similar underlying levels of profitability which are enabling that. So yes, I think it has been profitable and it has enabled insurers to drop rates to this extent. How long that can continue, I'm not sure. Okay, great. I think that takes us to the end. So thank you for joining me today. There will be another VAN quarterly webinar in 3 months, and it will be really interesting to take another look to see what's happened since now. So thanks for joining, and if you do have any questions, please do feel free to contact me, and I'll be very happy to answer anything that you may want to know. Great, thanks very much. Bye.